Ladies and gentlemen, good day and welcome to Infra Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Ms. Saloni from Go India Advisors. Thank you and over to you, ma'am.
Good afternoon, everybody, and welcome to Infra Engineering Limited earnings call to discuss the Q2 and first half of FY26 operational and financial performance hosted by Go India Advisors. We have on call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer from Infra. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risk that the company faces. We now request Mr. Harendra Singh, sir, to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Saloni. Good afternoon, all. I trust that this festive season has brought light, prosperity, and joy to you all and your families. May the year ahead be filled with renewed energy, growth, and continued success for all. Looking forward at Infra, our unwavering focus remains on building stronger connections between cities and driving our journey towards greater achievements. As we embark on this new summer, we reaffirm our commitment to elevating India's transportation infrastructure and advancing our initiatives in green energy, ensuring sustainable growth and a brighter future for all stakeholders. At Infra Engineering Limited, our journey spans more than 22 years, dedicated to strengthening the backbone of India's infrastructure. In line with the nation's evolving needs, we are scaling for success by accelerating innovation and building smarter, faster, and safer infrastructure solutions. Driven by our belief that infrastructure should reflect the dynamism and diversity of India, we are strategically entering in new sectors such as solar energy, railways, and battery storage. This commitment enables us to diversify our order book and secure high-potential projects in these emerging areas. Our proven execution capabilities, technical expertise, and decades of industry experience position us well for the next stage of growth, allowing us to create a sustainable long-term value for all stakeholders and play a pivotal role in India's ongoing infrastructure transformation. I am filled with pride at how far Infra has come and how much more we are poised to achieve. What began as a road-centric EPC company over 2 decades ago has now today transformed into a diversified infrastructure conglomerate. While road construction remains our core strength, and we have evidenced by 17+ highway projects across 10 states having 66% share contributed by the highway segment out of the total order book, and we have strategically ventured into the high potential verticals such as railways, metros, solar, and battery storage, and recently into transmission infrastructure. Our diversified portfolio now includes more than 29 active projects spread across 13 Indian states, including 7 rail metro projects, and our order book as of September 25 stands at 13,933 crores. Moving on to some updates on the infrastructure sector. So regarding road and railway, which is the transportation sector, under Vision 2047 as a Viksit Bharat, the Government of India emphasizes a modern, sustainable, and efficient transportation network that meets the needs of growing urban population. The focus is on decongesting the roads through the expansion of expressways, smart traffic management, and the development of integrated urban infrastructure. Improved road connectivity between cities and rural roads aims to boost economic growth and reduce travel time. Recently, under Bharatmala Pariyojana, over 26,000 kilometers of highway projects have been awarded, and plans to develop 50,000 kilometers of expressway by 2036-37 to ensure seamless intercity mobility. Simultaneously, the railway sector is undergoing a major transformation with increased electrification, advanced signaling system, and the safety upgrades to enhance speed and reliability. more than 45,000 kilometers of rail routes have already been electrified, and government targets 100% network electrification by 2030, and the major expansion plan are in the pipeline of adding more than 40,000 kilometers of rail track within next few years. The expansion of metro networks in major cities that promote public transport, reduce pollution, and ease pressure on road traffic. So together, these initiatives form the backbone of a sustainable, technology-driven transport ecosystem that supports India's goal of becoming a developed nation by 2047. Given the healthy project pipelines into road infrastructure and rail, we remain optimistic about securing a share of upcoming opportunities which should support our growth prospects in the medium term. Regarding renewables, which are solar-based and green hydrogen, India's battery energy storage sector is entering a period of a dramatic expansion, expected to scale from just 0.2 gigawatt in 2024 to nearly 66 gigawatt by 2032, unlocking more than $5 trillion economy in the market. So this growth, fueled by ambitious renewable energy targets, declining battery costs, and the robust policy support, positions BESS as a critical infrastructure layer for grid stability and round-the-clock clean energy supply. As battery storage transitions from early pilots to large-scale tenders and active deployment, industry leaders and new entrants are making bold investments across the value chain. At this pivotal moment, HG Infra stands committed to accelerating BESS innovation, contributing to India's energy self-reliance, and shaping the future-ready grid that delivers resilient, sustainable power to all. As India transitions a move to green hydrogen as well as ammonia, and with the mission to reach green hydrogen level of 5 MMTPA by 2030, HG Infra will continue to play a pivot role in the same and has already taken first step by participating in the recent tender of Numaligarh Refinery Limited. This tender is for the purpose of green hydrogen of 10,000 tons supply. The large component of operational cost of green hydrogen comprises of RE power, which will have to come from combination of solar, battery, and hybrid of wind, wherein HG Infra already has secured is a process of successfully executing the same. The move to green hydrogen has a widespread strategic alliance with HG Infra's foray into providing clean energy solutions. Regarding the transmission and distribution, where the government envisages a robust, modern, and green power grid to meet rising energy needs, with a major investment in high-capacity lines, advanced substation, and HVDC systems over the next decade. Strengthen inter-regional links and smart grid adoption with integrate renewable energy, enhance the reliability and support a low-carbon economy. India's One Nation, One Grid, One Frequency has unified all regional grids, enabling 112,250 megawatt of inter-regional transfer for stable, reliable nationwide power. In FY26, HG Infra aims to secure transmission and distribution projects worth 1,000 crores. Already has secured one project valued at approximately 50 crores. We remain active in the transmission space and continue to participate actively into the upcoming tenders. As HG, we are driven by strength, agility, and steady growth, and we are poised to capture emerging opportunities in renewables, power transmission, and road sector. And with proven execution, technical expertise, and industry experience, we are ready to deliver large-scale infrastructure projects that power India's total long-term development vision. Let me begin with a glimpse of our operational highlights. So as of Q2 FY26, the company's total order book stood at 13,933 crore, comprising 9,163 crore from roads and highways, 2,720 crores from rails and metros, 1,620 crore from BESS, 132 crore from solar, and 296 crore from transmission and distribution. The segment-wise roads is having 66, rails around 20, and renewables around 14%. As of now, the updates on EPC project is the Ganga Expressway project, which is a very prestigious project of ours, and around 4,800 crores, almost completed at 99%, and we are expecting COD anytime in the few months from now. The UAR project already has been completed and handed over, open to traffic. The completion certificate is anticipated to be received shortly. The Jamshedpur elevated project is running smoothly with the current progress of 23%. The Nelamangala-Tumkur project is gaining execution momentum now, has reached at 48%. Regarding HAM projects, the Karnal Ring Road project has reached 82% completion, marking steady progress and likely to be completed in Q4 FY25. As shared in the previous quarter, the provisional completion certificates for Raipur-Visakhapatnam projects of OD5 and 6 already received, and both projects remain close to completion, while AP1 project, which is also nearing completion, where the provisional completion certificate with effect from May 25 being received very recently. These all projects of OD5, OD6 and AP1 continue to be on track for 100% completion, that is COD, in Q3 and 4 of this year. The Khammam-Devarapalle project, KD1 and 2, PCC already received, which are at 95.3 and 91.8% completion. Both the projects are expected to be 100% completed 100% by in Q3 and Q4 of this year. The Chennai-Tirupati HAM project is progressing well at about 28%. The appointed date, which is provisional appointed date for Varanasi-Kolkata Corridor Package 13 has been received with effect from 30th September 25, and for Package 10 is expected to be received in this quarter only. The project progress of Package 13 is around 13%. The Kosi Parikrama Package 6 of Ayodhya, where the concession agreement is signed on 21st of June 25, the appointed date is likely to be declared in this month, and the project execution is just started. For the Narol-Sarkhej project, the financial closure achieved and the appointed date declared on 19th of August 2025, and the execution stands at 4.2%. Now to railway projects, the DMRC project is nearly 92% completed, and as per the scheduled timelines is likely to be completed within this quarter. The Bilaspur RVNL project, which is around 75% complete, and we are targeting for completion in Q4 26. And so the Kanpur railway station project is around 33%, where the progress is quite slow because of the concourse execution not yet started. However, we are expecting to pick now. The Dhule-Nardana project has achieved 17.9% progress. The Gaya-Sonnagar and Karanjgaon projects are at 16.4 and 13% completion. Progress across these projects was badly impacted due to abnormal rains, but is expected to pick in the coming quarters. The appointed date for the New Delhi railway station project has been declared as 6th of August 2025, and execution has commenced, and the project is at the initial phase with 3.7% completion done. Regarding the solar projects, during the last financial year, when HG Infra diversified into renewable energy sector by securing 183 solar power plants with a total capacity of 700 megawatt DC, out of which entailing a total EPC value of 2,243 crores excluding GST, the land lease agreement with the power purchase agreement with DISCOM being done successfully, and as of now, overall project progress stands at approximately 94.1%. With plant installation activity advancing largely as per the schedule, bearing few sites, however, which experienced delay because of the prolonged and the heavy monsoon conditions, and despite of the local challenges, the company remained confident of commissioning all plants within the contract timeline in the next few months. This progress will also facilitate to draw down the remaining debt, thereby supporting overall liquidity. On the financial front, approximately 89% of the required debt funding has been sanctioned, where around 74% of the disbursement already done. The remaining disbursement and the further balance sanctions will happen after the commissioning of these installed plants. Due to these pending disbursements, we had borrowed from banks to mitigate the gap to complete the projects on time, and as a result, our overall debt is coming on higher side at company level. Further, out of the total equity requirement into these projects of 721 crore, 705 crore being infused as of September 25. In this project, the company has executed binding agreement with GUNL and NVN for a 435 megawatt equivalent to 870 megawatt hour project, scheduling completion for November 26 and December 26 respectively. In May 25, we have secured additional 600 megawatt hour project from GUVNL. An agreement for the same is scheduled to be signed in November 25. With this, the cumulative contracted capacity stands at 735 megawatt or 1470 megawatt hour. The procurement process for BESS project has been initiated, and the orders for key components like power transformer, switchgear system, GIS have been placed by the company, and vendors for BESS container supply has been shortlisted, and final orders for the same is likely to be placed by January 26. Equity requirement for all these three projects remains at 500 crores, and 120 crores is anticipated to be infused in FY26 and balance in 27-28. Upon completion and commissioning of all these BESS projects, the company expects annual revenue of 225 crores from BESS. On monetization of 5 HAM projects, over the past few months, our leadership team engaged into intensive discussions with several prospective investors to monetize our second lot of 5 HAM projects. So these projects include Raipur-Visakhapatnam Corridor Package AP1, OD5 and 6, Khammam-Devarapalle Package 1 and 2, and our goal was to secure a partner who could provide both financial and strength and the sector expertise to maximize value of our stakeholders. So during August 25, we executed a binding offer document with Neo Infra Income Opportunities Fund. Under this agreement, our holding company will sell 100% of its equity stake in these 5 wholly owned subsidiaries managing these HAM assets. So this achievement reflects the successful execution of strategic negotiation and underscores a strong market trust in the value of potential returns of these infrastructure initiatives. Further to this, we have also executed the share purchase agreement of Raipur-Visakhapatnam OD6 package project recently, and remaining 4 SPA is targeted to be executed in this quarter only. The enterprise value of the transaction is rupees 3,584 crores. Total investment, equity investment, and total debt obligation in all these 5 HAM assets are 767 crore and 2,200 crore respectively. We had already initiated to fulfilling the compliances of the condition precedents as per the binding offer, which includes client's approval, lender's consent, and other representations and warranties. We expect to conclude these formalities and expect to conclude the transaction within this financial year. This transaction will deliver significant strategic benefits to the group by strengthening the balance sheet and reducing the leverage, thereby enhancing our financial flexibility. The realized funds can be deployed into new HAM bids, road expansion, and other high-return infrastructure opportunities. We believe this deal achieved a robust valuation, positions the company for accelerated growth and value creation in the coming years. Regarding the equity requirement for balance HAM projects, the total equity requirement for 11 HAM projects is 1,709 crores. As of September 25, 1,165 crore has been infused. Of the remaining amount, 195 crore is scheduled for infusion in 6 months from now, that is FY26, followed by 163 crore in FY27 and 186 crore in FY28. Moving on to the financial highlights of Q2 FY26, this is the first half of FY26. So the standalone financials revenue for Q2 FY26 reached 1,154 crore with an EBITDA of 147 crore and EBITDA margin of 12.7%. PAT for the Q2 FY26 stood at 67 crore with a PAT margin of 5.8% compared to rupees 89 crores and the PAT margin of 8.3% in Q2 FY25. Revenue for first half FY26 reached 2,863 crore with an EBITDA of 382 crore and EBITDA margin of 13.4%, and a PAT of first half FY26 stood at 193 crore with a PAT margin of 6.7% compared to 228 crore and a margin of 8.9% in first half of FY25. On a standalone basis, our gross debt stands at 1,634 crore. This comprises 550 crores in working capital debt, 400 crores of NCD and 684 crores from term debt current maturities and credit limit. Regarding the consolidated financials, the revenue for quarter 2 FY26 reached 905 crore with an EBITDA of 206 crores and an EBITDA margin of 22.8%. PAT for quarter 2 FY26 stood at 52 crore with a PAT margin of 5.7% compared to 81 crore and a PAT margin of 8.9% in quarter 2 FY25. Revenue for first half FY26 reached 2,387 crore with an EBITDA of 466 crore and at an EBITDA margin of 19.5%. PAT for first half FY26 stood at 151 crore with a PAT margin of 6.3% compared to 243 crore and a margin of 10% in first half FY25. As informed in the previous quarter, the dip in the consolidated revenue and PAT is mainly due to the elimination of intergroup transactions with SPVs of solar projects, which are recorded as capital work in progress in consolidated accounts. Since September 24 quarter till this quarter, around 2,111 crores of revenue and a profit of 380 crores has been eliminated in the consolidated financials. While standalone results reflected EPC revenue and taxation and tax, the tax cost remains in consolidated results until the SPV starts generating operational revenue, after which margins will improve. Turning on to our future strategy plans and the future outlook. In the year ahead, our priorities at HG Infra will focus on sustaining a steady growth trajectory anchored by strong financial fundamentals. Operationally, we aim to tighten working capital cycles, ensure on-time project delivery, strategically allocate capital and enhance monetization efforts. Bold targets have been set for FY26, where we plan to secure 10,000 to 11,000 crores of new order inflows, and by FY27 we intend to expand our non-road infrastructure portfolio to around 35%. Looking ahead, we are focused on expanding into building construction and real estate, green hydrogen and other emerging sectors. Our team is actively working to explore opportunities and contribute meaningfully into these sectors. At the same time, our strategy continues to diversify into high potential areas such as water management, tunnels, transmission and distribution, and smart urban infrastructure. We remain committed to strengthening our digital and automation capabilities, enhancing ESG performance at the strategic level, and delivering scalable, impactful projects across diversified geographies. Together, these growth levers will drive HG Infra's evolution into broader multi-sector infrastructure platform, creating long-term value at its core.
This we would like to open the floor for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants in the conference, please limit your questions to 2 per participant. We will wait for a moment while the question queue assembles. The first question is from the line of Vaibhav Shah from JM Financial. Please proceed.
What would be our HAM and solar receivables? Last time I indicated that solar receivables are quite delayed. So have we received them?
What is solar and debt receivables?
HAM.
The total debtor and you are talking of debtor?
Yes.
So total SPV receivables into debtor is around 255 crores in solar and 567 in HAM. And this contract asset is 235 crores in solar and HAM is 529.
Okay. Sir, we saw a sharp increase in the debt levels in the second quarter. So any reason for that?
So basically, there has been 3 significant areas where we have invested this debt, increased debt. One is the advances to our vendors. So that is around 150 crores we did into that because of procuring few of the core kind of material which are required for this and this thing. So mobilization advance also has been there, where 250 crores of mobilization advance is there. So there is a significant decrease into that, because in newer projects we could not receive any mobilization advance till date. So, and the payables also has decreased, where the retention has been paid because of the many of the projects which we have recently completed, where the vendors payment of the retention has been paid.
Okay.
This again, as I have explained into this remarks, that the total around 490 crores of debt is still to be received from the HAMP banks disbursement. So this is again adding to this particular increase in debt, which was again to Q1 as well.
So once that comes, the debt should go down.
Yeah, that we are expecting that in Q3 and Q4, significant decrease is likely to be there, and we will be roughly around the normalcy as we were in earlier quarters.
Sir, lastly, on the margin side, we have seen some softness in the last 2 to 3 quarters. So were there any one-offs in this quarter? Because margins were 12.7, and how do you see it going forward?
The margins were on track only. There are exceptionally few of the projects, say especially Ganga, where we have taken a hit because of the change in law. There is likely that we will be taking this to the arbitration. We are going to seek this kind of a opportunity where it would be paid. It is a payable kind of a thing, but outrightly not, the client is not agreeing to that. So this is one number which we discounted immediately into our quarter's number.
What was that amount?
This is in the first quarter, it was around 40 crore rupees, and in the second quarter, it is around 35 crore rupees.
So going forward, there is any other expectation, or it is now over? Or there are any further?
All projects are running very smoothly and perfectly within the right margins as we have envisaged. So it's only one of the projects which we have taken a discount, because we don't want to keep those numbers where the margins are likely definitely there as per the contract conditions, but it may take few quarters to realize that.
So now that is completed, the provision, or it can come further in Q3 as well?
No, we are all done into these first Q1 and Q2.
Okay. And sir, lastly, on other income, it is 17 crores in second quarter. So why it is so high?
So I have not seen that, because it was the FDR is also there, where some maturity would have been there. Other than that, I don't know. Let us see, and I will get back to you.
Okay. Thank you, sir. I will call back. Thank you.
Thank you. Participants are requested to limit their questions to 2 per participant. The next question is from the line of Shravan Shah from Dolat Capital. Please proceed.
Hi. Thank you, sir, for the opportunity. A couple of questions. So first, broader guidance on the top line front. So now, given the muted relatively in the 1H, to achieve a 7,000 crore, we need a 19% kind of a growth rate in the second half. So how do we now see?
The growth in first half of this year is almost as per the plans only. We are around 2,800 crores, around a 10 to 11% growth. So for the balance portion, definitely with the rains subsided and the appointed date of this Varanasi Kolkata package 13 received, Ayodhya is likely to be there within few days, and package 10 would be followed in next month only. So with that, we are estimating that a significant number would be in Q3 and Q4. So definitely, we are not very much sure that we will be touching 7,000, but something around 6,500 to 7,000 would be our number. With by end of the year, we will be able to comfortably be able to reach.
Okay. And for next year also, earlier we were looking at 8,000. So given if we can get a 10,000, 11,000 crore order inflow, so 8,000 crore is doable in FY27?
So with the balance order of about 14,000 crores, if we do around 4,000 crores in the balance, say even if around 4,000 crores in the balance part of the year, so we would be left with 9,000 crores in the year. And again, with the likely addition of the new orders, where now the orders even from the government or from any private client. So those are the orders which we do not expect much of the delay in the appointed date. So whenever the orders would be placed, likely within few months, the appointed date would be in, say, there, because of the land availability and everything has been improving a lot. So with that, we are expecting that we will be touching around 7,800 to 8,000 crores in the coming year at about 15% growth, as we have earlier estimated.
Okay. And now from the third quarter onwards, we should be having a 15 to 16% kind of a EBITDA margin, and that should continue for 2-3 years.
Yeah, roughly the margins, because that has been impacted because of the few of the projects which I already has discussed. So there, we have taken a hit of those margins immediately in the current quarters only.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please proceed.
Good afternoon, sir. Just one clarification again on the margin front. I think last quarter also you alluded that most of the Ganga Expressway related one-time provision has been taken in the last quarter only. But in this quarter also we have seen 35 crore that you have mentioned. I'm not sure, even if one includes that, I'm not sure whether it is going up to 16 odd %, which we used to be a normal track record on the margin side. So can you please help us with that?
I think only one project which you have taken this hit, not because the client is not eager to pass on this claim. There is change in law and there is one COS. So there is one interchange which has been constructed as a variation, which we have not considered as a revenue, because the client may take some time for approving that as a variation claim. So it is in NHA project or this kind of a project, there are two different things which are, because the client always consider anything which yes, definitely qualifies your claim. So here in this case, we are putting it to our consideration that we may or may not qualify immediately. So it is a matter of time. Definitely these are all the numbers which we have taken as a provision, or a margin has been discounted for the basis. Otherwise, it's not that the margins are not there. They were all there, and we were likely to see this number also coming in the future quarters. Within, I think, 3 to 4 quarters, this can be improved even.
But in second half, sir, now can we expect to get back to a normal 15-16% margin, or it will remain in 12-13%?
All the projects bear good margins, so we are expecting to come back to this normalcy.
Okay. And second, sir, on the order inflows, now if I compute your order inflows for first half, it is coming to around 1,500 crores only against the 11,000 crore sort of the expectation in the beginning of the year. So what gives us the confidence that we will be able to, in the remaining 4.5-5 months, we will be able to get to 10,000 crore order inflows?
So there are two big expectations which we are expecting. One is definitely at NHAI. So nothing much has happened in first half, and because of the land and the pre-qualification criteria and many more things, with now everything, because the approval of many projects, the bidding pipeline is very strong and they would be awarding in subsequent months. This is one area we believe. And the second is, as we have already successfully completed one of the project of Adani, this is the Ganga Express project. So they are also with a strong relationship with them. So we are expecting some private orders also. So the rail, roads, and this private orders, which we believe that within the future, say the further 3 to 4 months balance, we would be able to secure at around 10,000 crores of orders.
Okay. And sir, lastly, on the MSRDC project, so that 4,000 crore book is not available to us for execution. So given that sort of a situation, and most of the order inflow which will happen, let's say in next 1.5 quarters, then I don't know whether how much you will be able to execute. So are we being too optimistic about 7,800 crores sort of a run rate next year in revenues, given that very little order book will be left for execution for next year?
So if you see the total order, if you just take out this order for MSRDC, would be around 5,000 crores. So those are the orders out of which almost everything need to be done in FY27, just bearing, I think, not more than 400-500 crores, which would be out of just going beyond. FY27. So this is one area which we believe, and that the orders which we are likely to secure now. So those are the projects which we are expecting, where the time which we actually it normally take is 1 to 2 years from the award date to the appointed date. So this is not going to happen in future orders, because it's only a time when the orders, if you just can see the LOA to the appointed, it would be around 2 to 4 months maximum. So this gives us the opportunity and see us the confidence that we would be able to secure the orders, as well as we would be able to deliver this much of amount of orders.
Okay, sir. Thank you and all the best.
Thank you. The next question is from the line of Vishal from Antique. Please proceed.
Yes, sir. Thanks for the opportunity. Just continuing on the previous question, out of the 14,000 odd crore, barring the Maharashtra order, are there any other project where the appointed date is pending?
Yes, sir. Appointed date as of now, which we one of the Ayodhya project, which we would be getting within few days only, and Jharkhand project, that is Varanasi Kolkata package number 10, in the subsequent month only. So only the appointed date of this MSRTC project, that would be only balance.
So total you are mentioning, total 4 projects, including the Maharashtra one, where the AD is pending, is it?
Correct.
Okay, fine, sir. And second, last thing is, like in terms of financial closure of our the project where we have asset ownership, say BESS, even solar. So any update that can you provide, sir?
Solar financial closure already secured, say 89% of the total project being sanctioned and 74% of the total disbursement happened. So, but still the big chunk of disbursement is yet to be done. But we have progressed almost 94%. So this is a bank which is SBI, which is they are just expecting, because within the next 2 months we need to complete the almost entire project. So within that timeline, balance of 11% would be sanctioned and disbursed, and the balance already sanctioned would be disbursed in few months from now. So apart from this financial closure, where the best one of the sanction which we already have received from PNB Bank, and very recently I think by a few of the other banks are also participating in financial closure. So we are expecting for both the best project, where that by November and December we need to submit the financial closure.
Okay. Sure, sir. I think that's all from my side. Thank you.
Thank you. The next question is from the line of Parth from JM Financial. Please proceed.
Hello. Hi. Thank you for the opportunity. When can we expect the execution in the BESS projects to start?
Yeah, execution of BESS project is with us only, yes.
No, when can we start the execution?
Execution we already have started, where the land is in there and engineering being done and advances to transformer and GIS and other systems already have been placed. So we have already started commencing into both the projects of BESS.
So can we expect any meaningful revenue to be booked in this left of the financial year from the ESS project?
Yeah, around, I think, roughly around 150 to 250 odd crore rupees would be done within this year only.
And I missed one of your statement where you said that the MSRTC revenue for FY27. So can you just repeat it once, sir?
So once this order, where we are expecting the land is still not in, say around 70% as per the terms of LOA. So because of that, the delay has happened. But again, once the land is in place, the appointed date and the LOA do not have much of a difference. So in that scenario, we believe that once this year is over and by the time which appointed date is there, so significant amount of work would be done in MSRTC project in subsequent years, 27.
So can we expect it to come in this financial year or at the start of FY27?
So we are expecting by this year end only.
And can we expect around 500 crores of revenue from this project in this year?
Within this year, no. We are not expecting any revenue in this year. We are not calculating anything.
And in FY27?
FY27, definitely more than 50% would be done in FY27 out of those total 4,000 crores.
Okay. Thank you. Thank you, sir. Those were my questions.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Uttam from Axis Security. Please proceed.
Yes, sir. Thanks for the opportunity. Sir, my question pertains to the current bidding pipeline for HAM EPC and also for metro project. Last time you had given some idea of gaining some projects from metro also, and also from battery storage services market. So if you can highlight how much we have bidded in HAM and EPC and for the metro railways and metro and for other projects also.
So till date, whatever we have bid, it's around 12,000 crores of total bids which already there, where the results are yet awaited. There's around 7,000 crores in HAM and EPC projects into various sectors, and around the BESS and this solar is around 5,000 crores. And as far as bidding pipeline is concerned, if you see into 65,000 crores of order, where almost the land acquisition, and this is at the advanced stage from NHA, where the HAM and EPC are there. We are not considering any BOT project into this. And also Ministry is also expecting to bid around project equivalent to 70,000 crores within this year. So this is put together about 1,35,000 crores, which we are considering for the year, where the bid pipeline of NHA and Ministry is there. So apart from that, if as already when we have completed one of the big projects from Adani as a client, as a Ganga. So we are expecting that they are also in discussion with few of the projects already available with them to look as a EPC partner.
Okay, and so the margin would be same what we are getting in a Ganga Express project if we do some project with Adani going forward, or it will be lower than that.
We are expecting that on the similar terms we would be taking on the call on the similar terms, like roughly the same margin as we did in Ganga.
And the last one, what will be the timeline for this asset monetization that we have already done with this new?
So in all 5 projects, we have received the PCC and the NOCA and other obligations which we already have started. So we believe that the COD, as soon as we receive the COD, as well as soon as we get the permission of NOC from the client, which will likely to take not more than 1 to 2 months maximum from now. So by January, continuity in January or February, we would be doing 2 of the projects, and in March, all 3 balance projects would be done within the year only.
And sir, the entire enterprise value, all these transactions were 3584 crore, if I am not wrong.
So the enterprise value is 3584 crore. Out of this, 2,200 crores is going to debt, and 1,384 crore rupees the total amount which HG would be getting.
Okay, sir. That's all from my side, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yeah, hi. Good afternoon, sir. Thanks for the opportunity. My first question is, sir, can you please explain the change in law which has impacted our margin booking in the quarter? What it is related to?
The change in law, basically the aggregate being taken or being procured from out of state, that is interstate project cost. So there is a significant fee increase into that in UP. So whatever aggregate you purchase from out of the state of UP, that the duty is being charged. So with that, this qualifies as a change in law. And there is a royalty change, which also qualifies as a change in law. So in any of the projects of UPDA, they never has paid this change in law. This is the first time. In NHA, it is a normal trend. Okay, so that's why they are considering this particular event, which is since it's the first time, and they may or may not consider it. So that's why we have taken that. Though legitimate claim is there, so we are already has taken the legal opinion. So if they deny that, then we will be taking this to arbitration.
But we are working for Adani, right? So Adani has to get this money and pass it on to us. Is that right understanding?
There are both things. The contract clearly speaks that whatever we would be getting from any this client, which is a UPDA, as a concession agreement, that only will be passed on to us.
Understood. Understood. My second question is on the NHAI pipeline. I think NHAI had given us a very strong visibility. Is saying that they will come up with a 3.6 trillion kind of order awarding in the fiscal. Are you seeing the signs of that happening, or do you think it is the numbers will be much lower? And any outlook on and any and some color on the pipeline which exists as of now?
So definitely the NHA and ministry, they are all bullish about the strong pipeline because last 1.5 years, nothing much has happened, almost 2 years from. So again, the bidding is, the pipeline is from what kind of a project is greenfield maximum. So into HAM, EPC as well as BOT, it's a mix of all three. So taken together, it's around not less than 6 lakh crores, but definitely we cannot see everything would be done within this year. So we are expecting because of the land. So there is a mandate from the ministry as well as the finance or CMO that you should bid, you should award those projects only where the 80% or 90% of the land as per the contract is available. So earlier the practice was where the 30-50% of the land was available also was put to that awarding it. So now they are restricting the measures of it. And second is the quality of the DPR. So they are again considering this, okay, whatever DPR we should prepare, the DPR should not have not many more variations which are encountering the time loss as well as variations. So these are the two big things which are impacting the bidding. Otherwise, the pipeline is very strong. So we are expecting, yes, definitely it is taking time, but many projects which they believe and we are also expecting would be bidded within the financial year, and subsequently, I think there will be no delay in future years.
Good, sir. Thank you and all the best. Thank you.
Thank you. Before we take the next question, we would like to remind participants to press star and one to ask a question. The next question is from the line of Parth from JM Financial. Please proceed.
Thank you for the opportunity again. Sir, when can we expect the execution to improve in the Delhi railway station redevelopment?
New Delhi railway station, the execution already started. The improvement is likely, definitely, it's in the urban area. But whatever land and utility shifting which was supposed to be there, so significant progress has been done. So we are expecting around, say, 130 crores of the execution within this year only. So a significant portion would be done within this financial year when we have started the project, now quite aggressively.
And can we expect to receive the monetization money by the end of this year?
Yes, of course. As we are progressing and the COD is expected, all 5 projects COD is expected in the subsequent 4-5 months only. So this is a mandate which we have kept, that was the COD as well as NOC on the client. These are the two things which are the prime requirement for the transaction to happen.
Okay, thank you. Those are my questions, sir.
Thank you. The next question is from the line of Vineet from Investec. Please proceed.
Good afternoon, sir. Sir, the various news articles indicating that Maharashtra MSRDC orders may get cancelled and come up for rebidding. What are you hearing from the government authorities, how this should proceed, given land acquisition still is at around 30-35% levels?
So you're right, it's only a matter of land acquisition. So basically there are two things. One is definitely without the land, nothing can be done. Let's say LOA or appointed date cannot be declared. So they are looking at this almost 1.5 years, roughly say 1.5 years already has passed. But they are keeping it, but definitely once anything is to be done, it will take next 6 to 8 months. So they are expecting this order to be given, and now the land acquisition is quite expeditiously being taken. Earlier there was almost dullness for around 6 months. So now that it is actively being taken, and every month we are seeing that there are 10 to 12% land being added into the kitty. So with that, I think it's only a rumor part only.
Okay, but sir, do you expect these orders, MSRDC orders, to go for re-tendering in any case, or you're fairly confident. What have been the discussions with awarding agencies on this?
Till date, there is no news as such which is giving this sense that, okay, these are going to be cancelled and re-tendered. It's only a matter of time where the land acquisition is not, say, within as per the contract.
Understood. And sir, my second question was your comment on foray into residential building segment, and also green hydrogen. If you can throw some light on it, what type of orders are we looking for? How are we qualified? Will we initially go through JV route? Which type of orders will be targeting in those areas?
So as such, in the hydrogen, because all the refineries, they have been mandated to deploy or just install this hydrogen plants, which require green power. So one of the projects which we already has bidded with the JV partner only in Numaligarh refinery. So that gives us that particular sense. If we are setting up the plants where the green hydrogen is one area where the revenue would be coming back by the total operation expense, which is the green power. So the green power setup would be much more than the green hydrogen capex. So that we are considering, which L&T is the only player which until date they have taken 2 orders from Panipat and one. So in all the refineries this is to be done. And as also the government is looking into many other public sector undertakings where the mandate is given for setting up the plants. This is one area which we have picked. Then one of the trusted partner which we have taken into our area, who do have the patent for setting up the plants and indigenous components, which are now the prime requirement for the bids. As far as this is concerned, say apart from this, if you are looking at the opportunity which are into building, residential building or commercial building, so we are looking into this opportunity once we have completed in the Kanpur projects. So mostly done, the total building part already done. So we do not require any say JV partner. So we are looking into this opportunity where the building construction can be taken up in the government or the private.
Understood. And up to what sizes would we qualify in case of government orders there?
Not a big number. It would be initially at 300 to 500 crores.
Okay. Understood. Thank you so much, sir. Thank you.
Thank you. As there are no further questions from the participant, I now hand the conference over to the management for the closing comments. Over to you, sir.
Thank you for joining us today, and we remain confident in our continued success and are here to address any further questions. So please feel free to reach out to us and our IR advisor, Go India Advisors. Thank you. Good day.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.